Well, definitely some uncertainty as to exactly the way forward, but I think certainly from the perspective of the electorate, not much was happening under Samaras. There was the idea of austerity, but it wasn't really being pushed through in perhaps a more structural way that the economy could really benefit from. So almost under the previous government, it was worst of both worlds, because the Greek people were feeling suppressed, but really it wasn't happening in a way that markets are comfortable with, and that's why we saw yields on Greek debt as high as they were. And now the election of the new party, it really, I think, depends on how these negotiations take place with the Eurozone and with the other major members that they depend on for their bailout. And probably we're not going to really know exactly what's going to happen there until February, when the next tranche of the bailout is due. Well, I think a big risk, and when David Cameron talks about this, he's not even thinking just about Greece. He's thinking about the UK as well, because the election of an anti-austerity party, an anti-establishment party even in Greece, does somewhat set the precedent for the rest of Europe, the UK included. We obviously have UKIP in the UK, which are gaining prominence against a sort of general anti-EU backlash. And we see the similar things in Spain and France. So if those parties on the extreme raise further into prominence, then that does sort of put into question the whole political outlook. And at the moment, from the market perspective, I think a lot of the uncertainty has been undone somewhat from the latest European Central Bank policy. You know, that's putting a bit of a floor under stock markets, because even though we have this political uncertainty coming through, it's being backstopped by this injection of euros being pumped into the economy starting in March.